Friends, this is a class on ratio analysis, and as you know, the exam is very near. The sixth semester of Calcutta University is very near, maybe it is after 15 to 20 days. Also, this particular chapter, ratio analysis, we will come out with a very important exam oriented questions, and my conviction as it runs that I have given before you the 10 questions with answer and 1-2 question without answer, so that if you go through these 10 questions, whatever problem will come, definitely you will overcome all the difficulties in the exam. I have not given you 2 to 3 questions or 2 questions because the chance of coming common, chance of occurrence will be very less. Therefore, I have selected 10 questions and with answers I have submitted before you in this particular video, and if you go through this patiently, definitely you will remain fearless in the exam. So friends, before going to in detail, I will like to tell you, so far as some universities, I am particularly talking about right now the Calcutta University, the exam is near. They are asking 20 marks from this ratio analysis, and in ratio analysis they generally ask one long questions of 15 marks, another question either theory or short question of 5 marks. So the question distribution is one is your 15 marks long, another one 5 marks. This is long problem. This is for CU. 5 marks, it is short questions, theory or problem. So generally this type of questions are asking, so you will be getting 2 questions in the exam. So far as the Calcutta University is concerned, in BHU also they are asking questions, but only 1 question because their syllabus is little bit different. They are asking 1 question, maybe 12 marks or 15 marks in the problem question paper. Delhi University generally follows the same pattern of 12 or 15, but Calcutta University there are 15 marks and 5 marks as so far as the present syllabus is concerned, right? So keeping eye on this 20 marks question and either 2 problems or 1 problem, 1 theory, I have also given you the theory questions. The important theory questions is, what is ratio analysis? What is ratio analysis? And importance. You have to write the importance also. Question 2 also you will find limitation of ratio analysis. This is limitation. And very short questions. These questions answers you can get from this video, right? So you can note down the analysis of what is ratio analysis and its importance and limitation of ratio analysis. Point wise it has been given in the answer, and you can take a note of this so that these two theory questions are very important. Other very short questions they might be asking, that is your capital gearing ratio. Another one is your debt equity ratio. Interest coverage ratio. Interest coverage ratio. Turnover ratio. Turnover ratios. Sometimes working capital ratio. So friends, so far as the theory is concerned, these two theory questions are very important, and they may ask you 2 marks question of capital gearing, debt equity, interest ratio, turnover ratio, working capital ratio. So this is all about the theory questions in this particular chapter, and you can note down the answer from the answer sheet which has been given, right? Let me come to the problem. So far as the problem is concerned, they will be asking you, they will give some data, that is your variety 1. This is most likely variety. They will give you some data and they will ask you to prepare balance sheet. So you have to prepare balance sheet out of the information given to you, right? Some information they will give and you will be asked to prepare the balance sheet. So this type of questions I have given 6 questions because high important that you will be asked this question in the exam this time. So I have given 6 questions on this with answers. Variety 2, this is your, they will be asking you to prepare trading, profit and loss account and balance sheet. This is, I have given 2 questions, and others like they will give you certain balance sheet or PL and they will ask you to find out certain ratios. Find ratios. Debt equity ratio, capital gearing ratio, working capital ratio, interest coverage ratio, like that, turnover ratio, inventory turnover. They will not ask you the balance sheet or PL or trading. They will ask you 5 to 6 only ratios, and you have to answer the ratios. On this I have also given 2 problems. So friends, if you go through this, then your probability of getting common in the exam will be quite high. I cannot assure you that the figure will come same, but I can assure you the variety will definitely be same. Right? So let us start with this is all about the important questions of this particular exam, that is 6th semester, and ratio analysis is included in your accounting chapter. But before finishing, I want to explain before you the problem number 1 which I have given. I have also given with answer, but I want to do before you the problem number 1. So please go through the problem which has been given at the beginning of this and beginning of the class. If you have not copied it down, please copy it so that you will understand better. If the question is at your hand, definitely you will be doing better and understand better. So friends, they have given you the annual sales as 36 lakh, sales to net worth 4 times, current liabilities to net worth 50%, total debt to net worth 80%, current ratio 3, sales to inventory 6 times, average collection period 73 days, fixed asset to net worth 30%. So friends, here the concept of net worth is very important. Let me tell you, this is let us first find out what is the concept of net worth. This is question number 1. We are doing the answer here. This is a balance sheet, and you know this is fixed asset, this is your current asset, this is current liability, this is your capital plus reserve. This is one type. Here net worth means capital plus reserve. This is your net worth, that is owner's fund, owner's investment, that is the net worth of the business. How to find out this net worth? We can find out capital plus reserve, this equal to fixed asset plus current asset minus current liability. This is accounting equation, right? So this current asset minus current liability is called your working capital, and this is your net worth. So net worth is equal to fixed asset plus working capital. This is your equation 1. This equation is definitely hold good where long-term debt is not given. Sometimes there is a long-term debt like debenture, like your term loan, like your other long-term loan. So long-term, if long-term debt is given, the balance sheet will be like this. This is fixed asset, this is your current asset, current liability, debt, this is your long-term debt, this is your capital plus reserve. Now friends, this side is equal to this side, so capital plus reserve is equal to fixed asset plus CA minus CL minus long-term debt, right? This is equal to fixed asset plus working capital minus long-term debt. This is your net worth. This is another one equation where long-term debt is given. If long-term debt is 0, then this equation becomes this equation. This is equation number 2. right? So here this net worth concept was very important. Apart from that, we will solve the problem. Here sales is given, that is your 36 lakh. Friends, I like to tell you where the numerical figures are given. Numerical figures, that is sales. In this problem, the only numerical figure given is annual sales. So when numerical figure is given, you have to first start the problem where the ratio is relating to that numerical figures, right? Ratio is relating to that numerical figures. So friends, if we go for annual sales, here it is given sales to net worth 4 times. So the starting point will be your sales to net worth. Sales divided by net worth equal to 4 times. Okay. Now this is sales 36 lakh divided by net worth equal to 4, and net worth is equal to 36 lakh divided by 4 equal to 9 lakh. So friends, this 9 lakh is the net worth of the business. Now they have given you current liabilities to net worth. This is 1, 2, current liabilities to net worth. They have given you current liabilities to net worth is equal to 50%. So if you multiply 100, it will be 50. Alternatively, you can write current liability by net worth equal to 50 by 100, that is 50%. Or you can write into 100 so that it will be 50. Now, current liabilities equal to 50 by 100, it will come here into net worth, So this will be your 50 by 100 into 9 lakh, it comes to 4,50,000. So current liability is 4,50,000. Now total debt to net worth. Then let us come to 3. Total debt to net worth. Total debt to net worth. So total debt to net worth is 80%, 80 by 100. Or alternatively, you can multiply 100 so that it will be 80. So total debt by net worth. So total debt. This is your total debt equal to 80 by 100 into net worth equal to 9 lakh. So it will be 7,20,000 is your total debt. Friends, total debt means it is a long-term debt plus short-term debt or current liability equal to 7,20,000. Long-term debt plus current liability equal to 7,20,000. Now this long term debt, we do not know the long term debt, we have to find out. This is short total 7,20,000, current liability 4,50,000, it is 2,70,000 is your long term debt, right? Then we will come to the current asset, that is your current ratio. Now we are coming to current ratio. Current ratio is given as your 3. Current ratio 3. Current ratio is CA divided by CL equal to 3. So CA is equal to 3 into current liability is 4,50,000. It comes to 13,50,000, that is your current asset. So current asset is 13,50,000. Now sales to inventory. Sales to inventory. So let us start. Sales divided by inventory is equal to sales divided by inventory is equal to your, how much is the sales? Sales to inventory has been given 6 times. So sales is 30, inventory let us write. Inventory means stock. Stock inventory is equal to sales 36 lakh divided by 6. The 6 will come here, inventory will go there. So it comes to 6 lakh. That is inventory is equal to your 6 lakh. This is your inventory. Now let us come to debtor. How to find out the debtor? We can find out the debtor from the collection period. They have given you the average collection period as average collection period. They have given you 73 days, right? The formula, if it is 73, please tag 365. If it is 72 in the exam, please tag the year as 360. If it is 60 days, tag 360. If it is 90 days, tag 360. If it is 146 days, tag 365, like this. So average collection period 365 into average debtor divided by credit sale. This is your credit sale, 73 days. So 365 into average debtor by credit sale. Here cash sale is not given, so we assume that total sale is a credit sale equal to 73. Average debtor is equal to 73 into 36 lakh divided by 365. This is 7,20,000. So our debtor is equal to average debtor. Opening closing debtor is not given, therefore we can assume that this is the closing debtor, 7,20,000. Now friends, we will go to the fixed cash and bank. Cash and bank is the residual figure of the current assets. Balancing figure of current asset here. The cash and bank, that is your cash current asset is equal to stock. Stock means your inventory plus debtor, other information not given, and cash. So current asset, as we know, this is your 13,50,000. Your stock, that is inventory, is 6 lakh. Inventory is 6 lakh. Debtor 7,20,000. And the balancing figure is cash. So cash is your 30,000. So 30,000 will be your cash and bank. Then comes the fixed asset. Then comes the fixed asset. The fixed asset to net worth. Fixed asset divided by net worth into 100 is equal to 30%. So fixed asset net worth is equal to fixed asset. We will find out the net worth, then we will put the here. Here friends, the long term debt is given, so we will find out the net worth. Net worth is given as 9 lakh. So fixed asset 9 lakh is already given, equal to 30 by 100, or fixed asset is equal to 30 by 100 into 9 lakh. It comes to 2,70,000. So this is your fixed asset 2,70,000. So all the informations now are with us. We can prepare the balance sheet as they ask you to prepare the balance sheet. Now this is your liabilities. This is your assets. Okay. Now fixed asset we have already found out, that is fixed asset 2,70,000. Inventory, this is your 6 lakh. Debtor, this is 7,20,000. Cash 30,000. So total this is 16,20,000. Now net worth, that is your capital and reserve. I can say this is a net worth 9 lakh. Long term debt, we have already found out the long term debt is equal to 2,70,000. Your current liability, it is 4,50,000. Total comes to 16,20,000, right? So this is the balance sheet, and I hope Dear friends, you go through all these 10 questions and you will definitely see the question paper easy, and also you go through all the answers of these theory questions, and really in the exam it will help you so far as the ratio analysis in financial statement analysis is concerned. This is also called financial statement analysis, ratio analysis, as you can understand, right? If you like the video, please subscribe, offer your comments, and you can also refer to your friends. Thank you. Meet you in the next class.